everyone, my name is Marcello Kolax and today we are going to have a look at the week starting 26th of June. We are looking at European energy markets and see what we might have ahead of us. We'll start with the TTF front month product and we'll do two things. We will first have a look at what I said last week and then we have a look what's probably going to happen for the upcoming week. All right, let's have a look. Zoomed out on the TTF weekly chart, so one bar represents 1 week. I'm zooming out. We can see that we are retracing still towards a 61.8% FIB retracement, which is just above 20. And what we are retracing is this entire uptrend that goes back to 2020, and now it's been declining since August 2022. So we've got a good medium-term downtrend within this descending channel. We are below the 200-day EMA. The MACD is still bearish, although we are getting a preliminary bullish signal, but the firm signal is always the zero line. Let's have a look at the oscillator. This is for more near-term signals. We just moved out of oversold territory. We are in a trend, doesn't really mean much at the moment, but you can see we are not even going above the 50. So there is a chance for the market to actually continue to swing lower within this channel. On the weekly chart, you also have two very slim-bodied candles with long wicks, which is always an indication of hesitation, or the market is just playing it out at the moment. So let's zoom in so you can see this is the trend, but now we are on the daily chart and I have drawn in Fibonacci retracement levels. And what are we retracing exactly? We're retracing this up leg that started in June until mid-June, and now during the second half of June we've retested this upper boundary for a second time, and I've left in my other last week's arrow. So I was under the impression with this big red candle to actually move lower eventually. So this still seems to hold true because we are out of noise territory now. We are below the 38.2% FIB retracement, which usually clears the market for a more sustained correction lower, which usually goes, according to textbook, towards the 61% retracement, which here is 28. What I would like to see is actually a drop below this. I'm just removing this real quick. What I would like to see is a drop below this trough here in order to really continue lower highs and lower lows. And then really we'll just go and retrace in accordance with these fibs. If we move below the 61.8%, there's a good chance we're probably going to go to the 78.6%. But for first, at the start of this week, we have to clear the 50%. And then with the underlying downtrend, overall the idea is that we probably will retrace down to what we had at the start of June towards 22.85. For now, I'll set my very near-term target for this week towards the 61.8%, which is at 28 euros per megawatt hours. It seems like an easy move, so maybe those who are a little bit more daring can go down to here. The good thing with technical analysis, of course, is we are not predetermining a trend, a target, and then we just cut our winning winning trades. No, of course, technical analysis helps to let the good trades run and helps you to cut the failing trades short. When would I know that I am wrong? Well, I would say as soon as we start breaking above the channel, that would be a very clear indication that my downtrend bias is over. And then, of course, we would be very much confirmed if we are actually starting to make higher highs. This hasn't happened yet, so for now, one rule of technical analysis is that a trend remains in place until it doesn't. And for now, it does look a little bit more bearish, because let's have a look at the stochastic. We see that there still is some room left to go before we even move into oversold territory. So there is some losses to be had before anyone starts worrying about oversold levels. We also see in the MACD momentum tool that the trend seems to have peaked which was this uptrend here, this lower peak, and the market seems to be heading lower towards the zero line. One rule of TA is don't try to forecast the forecasting tools, so I'm not gonna say what the MACD might be doing, but for now it does look like we have peaked. All right, so overall, bear trend remains in the near and medium term or long term, however you want to see it. But for now, people were a little bit spooked when we hit this level for a second time, the upper boundary of the descending trend channel. But now we seem to be clear, and the sentiment seems to be bearish again. All right, let's go on to what the NBP front month is doing. I'm zooming out again and we'll have a look at the weekly chart. So here once again we did have this up leg from starting 2020. We went all the way up until here. We have our first lower peak here, and now we have been descending within this orange channel since August 2022, and we are approaching the 61.8% FIB retracement, which is of course 46, near 46 pence per therm. So this seems to be a reasonable textbook decline. Overall, once again, the downtrend remains in place until there's irrefutable evidence that it isn't. So for now, this downtrend continues. But let's zoom into the daily chart and see what's actually happening in the field. So you can see that I did not put my FIB retracement up here to the wick. As I explained last week, this is a question of taste, same for the TTF, because we did have a crazy intraday gain and loss as well. So is this really representative of the market? Maybe, maybe not. It's really just a question of taste. You can put it here or put it here. It shouldn't have much of an impact. Okay, so what we are seeing here, however, is that we are past noise territory, the 23.6%, which is at 87 pence per therm. And you can see support seems to be holding near 79, which is the 38.2% FIB retracement. Last week, I said, maybe a little bit early, that I ultimately believe the market to decline, just as the TTF. And this now seems to happen, although I'm with a little bit of a delay, because at the start of last week, the market did try to retest this level, clearly failed. And what I want to see now, same as for the TTF, I want to see a move below this trough, then towards the 50. And if you move below 50, there's a chance to go to 61.8. If you move below that, there's a chance to move to 78.6% FIB retracement. So this was last week's assessment. We are still kind of there, so it's still going well for us. So I am going to update this to 68. I think that's the most reasonable target. Once you move below that, I mean, I still believe, since we are still in that channel, that ultimately there's a chance for the market to move lower, considering that even with this peak, we didn't even reach the upper end of the channel, and we are still well below the 200-day EMA. I'm moving back to the TTF front month. Can you see how far below we are, below the 200-day EMA, back to the NBP? All right, so so much to the NBP. Let's have a quick look at European carbon. Let's start with the weekly chart once again. And what we can see here is that the market has been in an uptrend since, well, 2017. And just now, in Feb 2022, we saw that the market has been struggling to move above the 100. We tested it here once, a second time, and a third time, and we are now in a gradual decline. So we are in a long-term uptrend. That is true. And however, in the medium term, we are in a little bit of a descending channel, and that descending channel goes back to March 2023. And as long as we are within this near-term channel, there is we are in a downtrend. So last week, looking at the daily chart, this seems to be working out fairly nicely. Yes, as with the TTF and the NBP, we did try to retest this area of resistance. It did hold, and we are more or less bang on. Considering that the week ended with red candle. It's called a bearish Marabuzu. Marabuzu means there's no upper or lower wicks. We can assume that selling only stopped because the session ended, not because all this there's nothing left to sell. So it's always a little bit tricky over the weekend because people start to calm down and reassess the situation. But if this was just in the middle of the week, there would be a very good chance for the market to decline further. Now that we have the weekend between this Friday Marabuzu and whatever happens on Monday, there might be a little bit of reassessment. Usually what we see after really strong, especially in European energy markets, that I've been looking at for the past, I think 9 years, 10 years, that after a really strong bearish candle or bullish candle, we see a little bit of moderation. Here, for example, that's a good example. So, boom, strong bearish candle, a little bit of moderation. Strong bearish candle, a little bit of moderation. So, overall, however, I still believe that the near-term downtrend is in place within this descending channel, or midterm downtrend within this descending channel. And in the near term, yes, I still believe that with these FIBs in place, near-term FIBs, fairly easily we should push again below the 200-day EMA towards the 61.8% FIB retracement, which is at 84 euros per ton. If we look at the oscillators, so the oscillators have peaked. We did get a bearish signal fairly early on, exactly with this peak. Nicely done, oscillators. And we do see that the MACD momentum tool shows that momentum seems to have peaked. We are still above zero, so overall we are still momentum still is siding with the bears, although it seems to be a little bit toppy. One thing, especially during such periods where you have like a higher high, okay, that's a sign of the bulls, but we still continue having lower lows, or that's a sign of the bears. So the market is a little bit wonky. We start moving into like wider and wider ranges. So I'm wondering, this is always very tricky and very dangerous, but if we take it one session at a time, we should be okay. During such situations, please do not take any direct trading triggers from the 200-day EMA because you'll just be thrown out in and out of positions. So also, yeah, don't use any like longer term moving averages to give you a trading trigger. We'll just go with this for now. If we were to move below 61.8, of course, once again, there's a chance to move to 78.6 and so on. I would be surprised if we start breaking below the channel. The channel is already descending, so that would actually mean a downtrend acceleration. But what would be more likely is that we continue swinging lower within the channel. All right, okay, so for now, let's put it towards the 61. It's a very conservative, very easy target. I don't think there's any. This could be taken fairly soon. Maybe a little bit of moderation Monday, Tuesday, yeah, to the side, and then boom, a little bit lower. So let's mark this so I don't forget about it next week. So I'm making this arrow a little bit sideways. Maybe a little bit of moderation for like 1 or 2 sessions, probably, hopefully, let's see, and then below that. Once again, technical analysis is not a crystal ball, so now I'm not trying to pretend that I know what's going to happen. Nobody does. We are just going by probabilities, and TA simply gives you a framework to work with, right? So I believe that if we move below the if we move below this close here, yeah, then there's a good chance you move to 50 to 61.8, and that's how some people like to, knowing where the market is likely to go, and that makes it easier to plan your entries and exits and your targets and all that. And the good thing about TA, as I said earlier, is it tells you when you're wrong. So when would my near-term downtrend assessment be wrong? Well, essentially, I would probably go with these 2 levels. If we would be able to zoom in on the hourly chart, I can't do this because it's a different version I'm working with right now, then maybe I would be worried about the downtrend overall continuing. I would also be completely wrong about the near-term and mid-term downtrend if we were to break above this peak and above the descending channel. All right, let's have a look at coal. Coal API 2 weekly chart zoomed out. We are retracing right now an uptrend that goes back to May 2020 all the way up here, and now we've been declining since August 2022. We are well below the 200-week moving average, and we have now very nicely settled at the 61.8%, near 104 dollars per ton. So this is more or less like a textbook retracement. So I wonder how much further it can go, because clearly we have broken below it already. So I wonder if we can go all the way to 78.6, which would be $68. Let's have a look on the daily chart, what's happening here. So zooming out, you can see this is our descending orange channel. And we also see that we actually can draw in like a secondary channel, a channel within a channel, which seems to be holding quite nicely since, well, all year, since January. So what has happened? The white arrow shows what I was thinking of last week, but you can see it hasn't really materialized yet. We did move sideways and we did hit the upper end of the channel, as did all the other markets, but we didn't come down yet. We are not even past the noise territory filter at 23.6%, which is $110. So first of all, I think directionally still correct. Directionally, we are still headed lower because just now we did get a bearish oscillator signal from the stochastic. One word about the stochastic. By textbook, the crossover between the blue line and the orange line is the bearish signal, as if you're in overbought territory. So these are called %K and %D. But I usually like to wait out until we break below the overbought level. Yeah, same here. So you can see we have a few crossovers here, but did the market actually do anything? No. So you can see the market is still declining, although we are, by textbook, getting bullish signals, bearish signals, bullish signals. So I always like to wait it out until we're actually making it past the overbought or oversold territory. Here, once again, moving into the level is not the signal. Moving out of it is the signal. Moving into the level is not the signal. Moving out of it is the signal. Oscillators are always secondary. And they're just there to identify smaller swings, especially in a sideways trend. So here, once again, I would much rather go with what is on the chart itself, as well as what the momentum is telling us. So we can see here, the MACD, for example, also seems to look a little bit toppy. We see that the distance between these two lines, the MACD and the trigger line, is narrowing. So there is overall a chance that we move past this noise range, 110, and there's a good chance to just continue in line with the rest of the market, probably then first to a 105, 100, 96. Let's put it at 96 for now, because there's a good gap. It seems to be a good target for now. If you're really heading for like a gap fill, then yeah, maybe we go to $91. For now, let's leave it at 96. And we'll do the last one, Brent. Okay, so I've been getting a lot of messages on Brent because it's interesting how little there's happening. Once again, zoomed out on the weekly chart, we see that we did have our uptrend since April 2020. We peaked here, boom, and we have been in a gradual decline since, well, since when? Since March 2022. However, we seem to struggle to move below the 200-week EMA. And you can see, in a second I'll zoom in on the daily chart, we are first in a little bit of range here, and then the range drops lower, and now we're in a range here, but nothing really is happening. So on the daily chart, it looks more like this. Once again, we do see that we are a little bit in a sideways trend, no new highs, no new lows, and oh, we break lower. Oh, we break higher again, and then we are in the sideways range again. So for now, I would like to keep looking at this range here. So last week, I was thinking that we are more likely to head lower, which perfectly happened. And let's see what the tools are doing. In a sideways trend, it is good to not look at trend and momentum tools because you'll just get false signals. First of all, you probably shouldn't take these preliminary or like smaller directional signals in the first place because the market isn't really going anywhere. So in a sideways trend, it's always better to look at oscillators. So you can use the RSI, the CCI. I like the stochastics. But now we see that we are not even hitting overbought levels anymore, and the market is already moving lower. So what does that mean? Well, for now, once again, the trend remains in place until it doesn't. So there is no reason to believe right now that we are going to break into either direction. So I would believe that for now, it is more likely to continue swinging within this range. Overall, however, my bias is still bearish. Why is that? Because we are in a medium-term downtrend. We are well below the 200-day EMA. We have been making lower lows and lower highs, and we're in a range now. So overall, this is it's a very long and extended correction. It's been going on for since December 2022, and now we're in this tinier range since May 23. So overall, I do believe eventually we are maybe headed lower. That is my guess. All right. And for that, we would like to see a break below the 71. There's a little bit of a thicker range here. So what is this? 70. I would like to see a break below 70 before we continue with our bear trend. When would I be wrong? Well, we would be wrong as soon as we start breaking above this range, which is in the 77, 78.5 range, and then probably would be attacking the 200-day EMA, this yellow line again. That's when I would be wrong. But for now, I think we are more likely to swing within this narrow range. All right, that's it. That was my outlook for the week starting the 26th of June. Once again, my name is Marcello Kolax. You can find me on LinkedIn. Everyone have a good week ahead and see you around. Thank you very much and bye-bye.